Okay, we're going to look at problem 21-2 on page 1266 in your book. There is a spreadsheet you can download from the Connect software, which is what I've got pulled up here just to kind of make this easier. And we're going to build the statement of cash flows using the direct method for statement of cash flows. So remember, we're doing here basically we're trying to narrow down what happened with actual cash. Okay, what happened overall. Now, this first part of the spreadsheet, all it's asking is actually pretty simple and straightforward. It's just asking for the overall change in the account. So if it went up or if it went down, depending on what type of account it is. So simple enough. My cash account was 30 and now it's 42, and the cash is an asset, so it was an increase of debit for a total of 12. Accounts receivable is an asset, but it went from 75 to 73, so it would have an overall for the year a credit to the account for 2. Short-term investments, asset increased with a debit of 25, and this is just the overall balance of what would happen to the account. Okay, obviously these accounts, a cash account would have debits and credits in it all year, but we're just looking here to summarize and say overall what happened to the account. Overall, did it increase or decrease, and is that a debit or a credit to that account. Inventory went up by 5. Oh, by the way, I didn't say this. I'd highly recommend this problem is long and has a lot going on in it, but I didn't want to take some time in the video to read it to you. So I highly recommend, really before, I know we already started this, but really before you really get into this problem to read the whole thing, because it's such a large problem, I will go kind of quickly to make sure this video is not, 30 minutes long. So, pause this video now if you haven't done already and read the entire problem, start to finish, get a grasp on what we're doing. Then come back and continue watching to build this finish, or even better, try it on your own first. Land went from 60 to 50, so it's an asset, so it's a credit of 10. Buildings and equipment went from 400 to 550, so it was debited for 150. Accumulated depreciation, remember, is a contra asset, so it would be credited for 40. And I'm just going to do the same thing on this next one. So accounts payable went down, so debit of 7. Salaries payable went down, so debit of 3. Interest payable went up. Liability account increases with a credit. Income tax payable went down, so it was a debit of 3. Notes payable stayed, it went from 30 to 0. So it started at 30, went down to 0, so it would be a debit of 30. Bonds payable went from 100 to 160, so a credit of 60. Stockholders' equity, we have common stock went from 200 to 250, so it's a credit of 50. 100 paid in capital excess of part of 126, so it's a credit of 26. Now, I believe there's something specific on this one, retained earnings. We had some additional information. Okay, on G of the problem, it says that net income was $80,000 and cash dividends was $35,000 was paid to shareholders. So we have some additional information, so I can put, obviously overall this went up by 45, but I can actually put in more than just that. So I debited it for 35, it would be the dividends that I paid, and net income would have increased it by 80. This is a statement of income or revenues, my income statement. The change in it, obviously, my income statement starts over every year, so the change in it is just everything it's just all the numbers that I already have. So 30, 380, 130, 45, 40, 12, 3, 70, net income of 80. So now I can find my cash inflows from customers. So how I find that is I start with my sales revenue, and then I look at what direction, up or down, did my accounts receivable go. So in this case, I can start with my 380, so equals, oops, up there, down here, equals 380. And then I'm going to, depending on what direction and when, I'm going to add or subtract whatever happened in my accounts receivable account. So for me, the accounts receivable went down, which means I received more cash than what I had in sales revenues. So I would need to do 380 plus 2. My cash inflows would be 382. Suppliers of goods. So suppliers, goods. I have my inventory went up, so that would be additional cash use, so that's an increase. My accounts payable went down, which means I paid more cash, so that's a higher cash outflow. And then my cost of goods sold is 130, which is all the cash outflow as well. So I need to add those three numbers together. So equals cost of goods sold plus accounts payable plus inventory. My cash outflow to suppliers of goods is 142. Cash paid to employees. I need to look for salaries expense and what happened to salaries payable. So my salaries expense is 45 plus my change in salaries payable. Now we should notice something here. Again, it went down, which means I paid additional cash. If this number were over here, I'm going to actually subtract that because it went down. It's an increase in the cash outflow. Interest expense. I think I'll have one of these here. So interest expense, I've got my oops, wrong button. Start with my interest expense here. But see, since it went up, that means I did not pay all the interest that I owed. I owed more interest at the end of the year, the beginning of the year, so I need to not add this number. I need to subtract the two because of the direction that one. That gives me a net of 10 cash outflow. For income taxes, should go look for income tax payable or income tax expense and income tax payable. So income tax expense, and then depending on what direction it went, plus or minus what the direction of income tax payable. Since income tax payable went down, that means I paid additional cash, so I'm going to add my income tax payable. Okay. Now move on to the sale of land. I think that was a given amount here. I sold land for $7,000. 7. Purchase of short-term investment. Common stock purchase of 25. Purchase of equipment. Equipment cost $150,000. Financing activities, repayments of notes payable. Oh, actually, let's go look at the note payable over here. Notes payable went down. We got paid it off, so I paid off $30,000 on it. Sale of bond payable. Bond sale for $60,000. Sale of common stock, $56,000. And payment of cash dividends, $35,000. So my net increase in cash should be 12. And this just the sum of all these, but it's okay. So we can go back and check and see if this is right. And we can fill all this out. This is just this is the more proper form, but we pretty much did that here. We just put it in debit credit form here. Effectively, you would just refill that out here. I'm not going to do that in this video. But an easy way to tell whether we were correct or not is we've got a net increase in cash of 12, and that should match the overall increase in cash for the year, and it did. My cash went up by 12, which is a good sign that you probably did it correctly. And that will be all. I think that's almost it for chapter 21. I'll look and see if there's anything else, but I think this might be my last video for chapter 21 and my last video for the semester. So please let me know if you have any questions.